Bitcoin has just blasted through its all-time high again. This moment might feel like history in the making, or maybe the calm before the storm. But before you rush in or run away, ask yourself one crucial question. Do you really understand what this moment means? What forces are driving this surge? And what might lie ahead for Bitcoin and the broader crypto markets? In this update, I'll guide you through 7 crucial truths you need to know before you take any action, whether that means buying, selling, or holding your position. Because in markets like this, knowledge isn't just power, it's survival. Why this moment matters. Bitcoin is now soaring above $116,000, smashing its previous records. This isn't just another price milestone. This moment signals a seismic shift in the world of finance and digital assets. Why is this happening now? The 2024 Bitcoin halving has just passed, cutting the number of new Bitcoins created roughly in half. This supply squeeze has historically caused major price rallies, like a shrinking faucet forcing prices higher as demand remains steady or grows, but scarcity alone isn't enough. Billions of dollars are pouring into Bitcoin through exchange-traded funds, or ETFs, institutional investment vehicles that allow massive players to buy Bitcoin legally and securely. BlackRock, Fidelity, Morgan, and even sovereign wealth funds have been accumulating Bitcoin quietly and consistently over the past year. Corporations like MicroStrategy have added significant Bitcoin reserves to their balance sheets, signaling growing corporate acceptance. Governments are warming to the idea, exploring Bitcoin's potential as a reserve asset or payment mechanism. This is not the wild, speculative mania of 2017. It's a slow and steady institutional march towards acceptance and adoption. But that doesn't mean it will be smooth sailing. When the world agrees Bitcoin is real, it creates enormous momentum. But momentum can carry markets to euphoric heights or crash through valleys. So what happens next? Will Bitcoin keep climbing, dragging altcoins along? Or is this the moment when the market shifts and the real risks begin? The answers aren't simple, but understanding the forces at work can help you make smarter decisions. Quick pause. If you're finding this useful, consider subscribing. This channel isn't here to hype the market or spread fear. We offer calm, clear insights so you can stay grounded in a space built on chaos. And when you're ready to explore altcoins, grab our Crypto Red Flags checklist. It's free, and it could save you from a costly mistake. You'll find the link in the description. Number 4, alt season could arrive, but it's not guaranteed historically. After Bitcoin's initial rally, attention shifts to altcoins. The logic is straightforward. If Bitcoin rallies this hard, smaller coins could rally even harder. Altcoins like Ethereum, Solana, Avalanche, and emerging microcaps sometimes outperform Bitcoin during these alt seasons. But not every altcoin survives market downturns. Many coins that soared in 2017 vanished by 2021, and many of 2021's stars are fading already. If you're considering altcoins, ask yourself, do you understand the tokenomics? Does the project have a solid team and clear roadmap? Is there real adoption, or just hype? Or are you simply hoping to catch lightning twice? All season might come, but not every coin will join the party. Number 5. Selling now feels tempting, but could cost you. Seeing Bitcoin hit new highs can make selling feel like the smart move. Maybe you've doubled your investment or finally broken even. Cashing out can feel like securing your gains. But what if the price keeps soaring after you sell? Selling without a plan or out of panic often leads to regret. Smart investors set clear exit strategies. They scale out gradually, locking profits while keeping some upside potential. They manage downside risks carefully. Regret is a costly emotion, especially in volatile markets like crypto. Number 6. Many cryptos won't survive the next cycle. The crypto market is littered with projects that promised the moon, but never delivered. In 2017, hundreds of coins launched promising revolutionary technology. By 2021, most were gone, forgotten, or worthless. We see similar patterns today: copycat projects, pump and dump schemes, tokens with no users or developers. This cycle will lift many coins temporarily, but the next bear market will wipe out the weak and vulnerable. If you invest in altcoins, ask, Does this project solve a real problem? Is there actual adoption? Is the development team active and transparent? Because hype fades quickly and only the strong survive. Number 7. Your emotions are your biggest risk. Bitcoin or Ethereum aren't your biggest risk. It's your emotions. Fear, greed, FOMO, doubt. These feelings destroy more portfolios than any market crash. People buy too late, sell too early, go all in or freeze up. Studying charts won't help unless you also understand yourself. Learn to breathe. Zoom out. Create a plan. Markets don't reward the smartest, they reward the calmest. Final thoughts. Bitcoin's new all-time high isn't just a price milestone, it's a test. A test of patience, clarity, and emotional discipline. Some will FOMO in, some will panic out. Most will do both. But winners think slowly, move carefully, and act with intention. This channel is faceless for a reason. No hype, no noise, just signal. If you found this helpful, subscribe to the channel. This space moves fast and most voices either hype or panic. Here, we do neither. We break down crypto with calm, clear, level-headed insights, so you can make smarter decisions without the noise. And if you're thinking of investing in altcoins, download our free Crypto Red Flags checklist, a simple guide to help you spot the warning signs before it's too late. The link is in the description. No hype, no noise. Just signal. The 7 crucial things to know before you act. Number 1. Bitcoin leads the charge, but it never moves alone. Bitcoin is the original cryptocurrency, the pioneer and benchmark. Every bull market cycle starts with Bitcoin surging first. However, Bitcoin's run rarely stands alone for long. Ethereum, Solana, Avalanche, and other altcoins typically follow. Sometimes they soar even higher than Bitcoin, offering outsized returns, but with greater risk and volatility. This cyclical pattern is known as market rotation. Capital moves in waves. First, large-cap blue-chip cryptos like Bitcoin surge. Then smart contract platforms follow. Then smaller altcoins and speculative coins, including meme coins. Each stage tends to bring more risk and volatility. Looking back at past cycles, in 2013, 2017, and 2021, this pattern repeats with variations. If you feel like you missed Bitcoin's biggest moves, don't despair. The real volatility and opportunity might lie ahead in the altcoin markets. But timing is everything. Blindly chasing green candles is a recipe for losses. Watch Ethereum's dominance and capital flows carefully. These can signal when altcoins will rally. Because in crypto, timing isn't just important, it's everything. Number 2. This rally is institutional, not retail. The Bitcoin boom of 2017 was driven by retail investors, fueled by social media hype and speculative frenzy. Today's surge is different. It's fueled by institutions. ETFs have unlocked access for huge pools of capital. BlackRock, Fidelity, JPM, ORGAN, and sovereign funds are quietly buying Bitcoin as a long-term asset. They are not traders looking for quick profits. They accumulate steadily and methodically, often out of the spotlight. This changes the market dynamics profoundly. Institutional investors have deeper pockets, more patience, and sophisticated risk management strategies. Retail investors aren't early adopters anymore, but they're not necessarily too late. Understanding this new market landscape is key. Ask yourself, who is buying Bitcoin today? Who might be selling tomorrow? The answers could determine your strategy. Number 3. Euphoria is a warning sign, not a green light right now. The market sentiment feels euphoric. Crypto Twitter is buzzing. But this is exactly when caution is most needed. Every major Bitcoin rally in history has seen waves of irrational optimism, followed by sharp corrections. In 2021, it was the rise of dog coins and meme culture. In 2017, the eco-frenzy was raging. Soon after these peaks came brutal market crashes. While you can't control market swings, you can control how you react. When euphoria runs high, the smartest investors pause and reassess. They avoid getting swept up in the hype. Remember, the higher the euphoria, the thinner the air, and the faster the fall.